I'm so glad. I need a break. I need a mental break. I need a mental break. And if you've watched Friday After Next, I feel like I'm in Holy Moly's donut shop. Cause when it get hot like this, it's not even just when it's hot. When summertime come, when flies get in the house, it seems like the biggest flies in the world make it in my house in the summertime. And it's very difficult. Like, I'm trying not to cuss. It's very difficult to get them out of here, to get them out. And they're going to be all right here because, you know, insects are attracted to light. So having the light set up, they're going to be all through the live stream. I've tried the fly paper. I've tried the fly swatter. They don't even make fly swatters like they used to back in the day. So the fly swatters now are so cheap. When you go to swing them, they bend back so far that it's just terrible. You got to make one. You got to make one from scratch. It's terrible, guys. It's terrible. But I know y'all ain't tuned in to see all that, but I got some to hear all that, but I got some stuff on my mind. So, had the show and everything ready hours ago. I promise you I did. Hours ago. And now when I'm browsing over the prompter, it's been right the last few times we've done the live stream. Like, everything we needed to be there has been there. So I'm like, cool, I don't really have to check that no more. So what will happen will be, like, after we load the script into the live stream, let me delete this or close this out. We load the script into the live stream. What would happen, some words would be missing. That's what it used to do. So I have been checking to make sure that don't happen again, right? So that hasn't happened in a while, ever since I've been checking it. So tonight, I'm thinking, you know what? I ain't got to check it. It's been a while since that happened. I ain't got to check that. And lo and behold, the night I don't check it, it's words missing in the script on the prompter. Yeah. So just bear with me, guys. If you tuned in, thank you for tuning in. I'm still setting up. Say something in the chat and we can chop it up. I hope you had an awesome day. You can see I'm a little frustrated and hot as ever. Hot as ever. Up in here. Look at that fly. You would have thought I was a kung fu master last night. I was able to catch one of them fat suckers with my hand last night. I just kept being patient and focused. On the first try I caught it. I got you. Got you. Die. Oh, I wish I had caught all of them. You see it? You see? Oh. Let me hurry up and get this show started for y'all mess around and see me have a nervous breakdown on this live stream. Oh. Where is the script program? I could have sworn I pushed the button. I don't even see it. Let me go back. Where am I? Here. There we go. Thank you, sis, for sharing the live stream. She support every night and make sure that she share this live stream. I appreciate you so much. So it just got shared on Facebook when I hear that chime go off. Might as well do the live stream outside. Let mosquitoes in on the party. Y'all saw that? Look like a doggone horsefly. Oh, just don't land on me. Just don't land on me. It did it last night. That fly was like, I'm gonna be in this show. I'm gonna be in this show. Whether you want me to or not, I'm gonna be in this show. All right, there's the practice test for that. All right, so it looks as if the chat is working. Let me check this other chat thing. And I really like this mouse, guys, but what sucks about it is that when it get dirty, you got to take the mouse apart and clean it out, because if you don't, it's going to get stuck. It's gonna get stuck and be difficult to move around. The stream ain't gonna be smooth. So yeah, guys, give me a second. Let me clean this mouse. Yeah. But I had a great day in the market. I'm looking forward to our live stream on Sunday, and I got a couple days to prepare for it. And I'm definitely gonna prepare for it. I'm not gonna do it all in one day, as far as like waiting to the last minute to figure out what I'm gonna say and what I'm gonna talk about and all that other good stuff. I'm gonna actually plan it out. Let me put this up on the screen. Let me put the Q&A thing up here. Plan it out and put that here. No, not that one, this one, the ticker poll. So that way, if somebody's streaming, y'all can put that in the chat. Get the chat going, guys. Don't wait on me to ask. It's delayed. Y'all see I'm here. Y'all see I'm sitting here. You watching the live stream. It ain't gonna hurt. Hit that like button. Consider subscribing to the channel. You got any questions to ask, or where you tuning in from and all that other good stuff, go ahead. Go ahead. Help me out. Go ahead. It ain't gonna cost you nothing. It's free. Go ahead, comment. Chat, say something. So yeah, we got the mouse going. The other mouse should already be fine. What else do I need to make sure we do before we get started? Okay, double check this script and make sure there's no words missing. Okay, that looks fine, but it can be deceiving. So let me read a little bit of it, or at least browse over it and see. If you watch on tune in, because it used to be certain spots, so I would know where words was missing at, because it was certain ones where words would be missing. So I would just look in those places. And then one time I thought that it was just one word, so I'm like, I'm gonna ignore it and keep going. Boy, was I in for a treat that night. Oh, it was that one word. I'm like, no, it's just that one, I'll be fine. Man, I got a few sentences further, and it was just words missing here, words missing there. I was like, man, I should have did what I was supposed to do the first time and just went ahead and fixed it. Shame on me. Because now it's all types of messed up. All right, guys. Check one more thing. Check the sound. We already checked the chat. That's good. We checked the script. So we're going to start right there. We got that going. And I believe I got everything over here. And remember, it's hot, so we're going to switch through cameras if the camera overheats. So we got a plan for that and all that other good stuff. So let me check the Thinkorswim platform, and then we can go ahead and get started. I'm glad I did, because look at all this mess right here. Let's get that off. Let's get that off. Go to SP 500. Go to the quotes. We're going to switch this to S&P. Guys, I love doing these live streams. I really do. So I know it seems like I'm frustrated tonight, but I'd be lying to you if I said I wasn't. But it's not about the live stream. I love doing what I do. Just personal stuff going on right now. And this heat is killing me. I do not like it when it's too cold, and I don't like it when it's too hot. But I can deal with it being cold more so I can deal with it being hot. And it's like the air conditioner just ain't enough. Like you got to be right there in front of it. I don't want to be in front of the air conditioner the whole doggone day. I want to move around. But anyway, everything's going to be all right. So let's go ahead and get this show started. Am I sweating on my nose? I look fine. All right, let's get it going. Welcome to Market Recap Live. I am your host, Joseph Martin, and thank God. Oh, thank God. It is Thursday. It is Thursday, guys, and tonight we are taking a look at ticker GIS. You might know them better as General Mills. General Mills Incorporated was founded in 1928 by James Ford Bell, with the first office opening in Minneapolis, Minnesota. Now they're publicly traded on the New York Stock Exchange and have a market value over $20 billion. Yes, that's billion dollars. General Mills is in the foods products industry in the consumer staples sector, and they are listed in the S&P 500 index. Some of General Mills' competitors are the Kraft Heinz Company, ticker KHC, the Campbell's Company, ticker CPB, and Conagra Brands Incorporated, ticker CAG. We're going to review General Mills earnings, their website, and pull up the charts to perform a quick technical analysis. I left all of the stuff up from earlier to perform a quick technical analysis. But before we do that, let's do our roll call and check our stream poll. We are streaming live on YouTube, Facebook, and X. Let's get this chat going and tell us where you're tuning in from. Put a Y in the chat if you're tuning in from YouTube, F for Facebook, and an X for X. While you guys are filling up the stream and the chat, here's the mission statement. We are building a community over here for people who want to take control of their financial situation by learning how to unlock the wealth building power of the stock market. And we are streaming Monday through Friday following trading sessions at 11 p.m. Eastern time. The U.S. stock market regular trading hours are 9:30 a.m. to 4 p.m. Eastern time. And there's a link for the New York Stock Champ. I don't know why I keep saying, hold on. I'm about to say, listen. And there's a link for the New York Stock Exchange calendar down in the description. And just in case you don't use it, let me just tell you right now, I'm going to remind you at the end of the show as well. But the stock market is closed tomorrow in observance of the holiday, July 4th. So the market is closed tomorrow. So I was going to tell you at the end of the live stream. I'll go ahead and tell you now since I'm bringing up the calendar, okay? But go ahead and let's get to it. Let's move on. Let's get to these earnings. So here we go. Bam, 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 bam. Take this off. That ain't supposed to be there. All right, there we go. All right, let's talk about it. Let's get these earnings together. So General Mills, ticker symbol GIS, the $20.1 billion company, reported its fourth quarter earnings on Wednesday, July 1st. They have a 52-week high of $54.18, which took place on July 2nd last year, and a 52-week low of $31.75 that occurred on June 4th, which is a trading range of $22.43. And they closed today at $37.57. General Mills earnings report met market expectations on the top line, reporting revenue of $4.6 billion, but they beat on the bottom line as favorable trade expense comparisons and supply chain productivity metrics expanded adjusted performance metrics. EPS was higher than the analyst and market expectations of 81 cents when they reported an adjusted EPS of 95 cents. General Mills reported a GAAP net loss, guys, net loss of $2 billion, which is a swing to unprofitability compared to the $294 million net income they reported this same quarter last year. The earnings were released before the market opened, followed by a 9 a.m. Eastern Time conference call. As far as guidance, management expects fiscal 2027 adjusted diluted earnings per share to be down 8 to 13%. That 52-week high compared to today's closing of $37.57 represents a decline of 30.7% over a span of a year. So if someone invested $1,000 last June at that 52-week high of $54.18, they would be seeing a loss of $306.57. Woo, we did that, guys. Now, let's go ahead and move on. Let's move on. Let's talk about why we visit these company websites. We're looking at the visuals and text to find answers to these key questions. What goods and or services does the company sell? How important are those goods and services to their customers? What makes this company stand out from the competition? And how well do they take care of their employees? We look for those answers in four main areas: the homepage for the goods and or services, about us for purpose, vision, and mission statements, careers for employee benefits and opportunities, and investor relations for SEC filings and stock quotes. And for your convenience, all companies featured in tonight's live stream are down in the description. Now let's go visit General Mills website. All right, let's do that. Bam, 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 bam. All right, we're good. And let me turn down this volume just in case somebody does comment. That chat gonna be loud. It's gonna like boop. So let me turn that down. All right. So here we are on the General Mills homepage, their website. We're on the homepage. So we're gonna go to About Us, Careers and Investors. Everything we need is right at the top. So let's browse over their homepage and see what we got going on. Food the world loves from people who care how it's made. For over 160 years, that care has shaped everything we do and still does. Got it. So business, food, pet. So they do pet food as well. The brands you know and love and the ones you have yet to meet. That threw me off. Like, what is they talking about? All right, so let's just explore the let's explore the brands. Let's explore the brands. Making food the world loves. Meet our family of 100+ brands across the world. Oh gosh, okay. So cereal, Betty Crocker, Blue Buffalo, Bisquick. That's kind of weird the way they did this. That's why I'm like, what's going on? They did it into these little. I wish they had just showed a picture of the brands. You just went over it real quick, but I wish it was a different way to do this. Category. We not clicking on all this stuff, so I'm gonna just do what I can. We gonna work with what they got. We don't have a choice anyway. So Autumn's Gold, Betty Crocker, Bisquick, Chex Cereal, Cheerios, Chex Mix, Cinnamon Toast Crunch, Cookie Crisp, Cocoa Puffs. Yeah, guys, you know where to find it. There's a lot of stuff. I wish they just had it where it was a picture and we could just see what the stuff was. So they got a lot. They said over 100+ brands. I believe them. And that says only showing 20 or 40. And then it says something about pets, pet food, and all different types of stuff. So I'm just going to browse over this real quick. Yeah, it says show more results. We're not going through all that. All right, let's go to About Us. Let's go to About Us. No, we're not going to About Us. We need to go back to the home page and finish browsing. So that was the brands. Here it is, About Us. More than just food. At General Mills, we make food for people and pets across everyday occasions with more than 100 trusted brands and over 100 companies. Okay, we focus on great taste, quality, and value, making food that meets a wide range of needs and preferences. Get to know us and what we stand for. News and stories, browse that. Remember, links to the website are down in the description for your convenience. All right, let's go back to the top. Come on. Go back to the top. There we go. Go to About Us. Oh, I pushed the wrong thing. About Us. Let's go to Learn More. Making food the world loves since 1960. I'm saying, guys, forgive me. I'm all over the place. Let me take a breath. All right. About Us. Making food the world loves since 1866. Who we are. We started as a flour mill in Minneapolis, Minnesota. Today, General Mills is a global food company with more than 100 brands sold in over 100 countries. Over 100 countries. Boy, this is going to be a blooper reel filled video with me sweating like a Hebrew slave. This is going to be something else tonight. Oh, if I make it through this, I can make it through anything. I promise you. Oh, here we go. You'll find food. We moving on. What we make. Cheerios on a busy morning. Progresso on a cold day. Old El Paso on taco night. I do like El Paso. I do like that. Annie's after school. Blue Buffalo for your beloved pet. Okay, so that's the pet brand that they talk about. Our brands, they put a hyperlink there for you to go there. How we think about food. See what we're cooking up. So here's a calendar with all different types of news. They got Wheaties, Cheerios. Okay. All right. So we went through that. Let's go ahead and go to careers. Let's do it from the top, because I want to click on it where it just takes everything. All right. Is that some type of cookie down here? Yep. Let's close this out. Cookie. I hate it when they give us these cookies. I promise you I do. Nah, it's acting like it ain't even a cookie. And they zoomed us out. So here's 150. I wonder if they had it zoomed out on the other part of the website we were looking at. I hope they didn't. who we are. Let's browse over this page and then we'll just do what we can, see what we can find. And we're in the career section now. Our recipes for success: imagine and create, join our table, experiment and learn, good-hearted people. Guys, we're looking for the benefits. That's what I'm looking for. Get to know us. Get to know us. We exist to make food the world loves. And with a rich history of boldly building brands, General Mills is on the move. Your seat at the table, discover your career, learn more about our career areas. Where will you imagine what's possible? They all over the world, guys. They all over the world. So I think that this is a map for you to find opportunities for jobs and things like that in different areas around the globe. Here are benefits for the United States. So we found benefits and support. We didn't finish browsing down the website we were just looking at. And I clicked X. And then it took us back somewhere else. So we go up here to the top to careers. And after I do that, we go back down because we never finished browsing over the whole page. That's why I went back. We clicked on that map and it took us somewhere else. So let's go back, finish browsing, and then we'll go back to the map. Hungry for what's next? Search jobs. Join the conversation. Okay, cool. So that was the rest of the website. We're going to go to North America. Got it. People and purpose, a winning formula. At General Mills, the days are fast, fun, and rewarding. Purpose matters because we're here to grow, drive value, and make food the world loves. Grow with brands you know and trust. Okay, now see how they just got this like this here? This is easier to see. Even if they don't have a product, this is easy to recognize these brands by doing it this way. So if I click that, they didn't even do it. This is crazy. This is wild. They need to overhaul this website. We go to our brands. Yeah, they did the same thing. They just took it to that same section that did that craziness. If they had it like this, it would be real easy to see the brands. But anyway, let's move on. G stands for good. G stands for good. Okay, inclusion, benefits, and support. Explore our locations. Learn more about. Hungry to mix it up. Okay, so we're at the bottom. Let's go ahead and go to the benefits right here. Read more. And let's see how much information they give you. Okay, so North America, of course, is Canada and the United States. So we would click there. Let's browse over this to see if there's anything else on the page. Nope. All right, so let's click on United States. Health and well-being, retirement and financial well-being, time off programs. All right, and then we just click this and they give a little bit more details about each category. All right, we got it. If we click benefits, it just takes you down to the page. Takes you down further on the same page. Now we're looking for investor relations. Let's just go ahead and close this out. This takes us back to the home page right here where it says investors. Cool, we almost done and we can go ahead and move on. This was a trip. So investor relations, they trade on the New York Stock Exchange. There's the ticker symbol, et cetera, et cetera. We're going to browse over this and then we're going to click on the stock information. I don't see it at the top of the screen. So let's scroll to the top of the page, all stock information. The link is right here, guys. So we click that. Here's the stock quote. Here's the chart. Here's some other tools. Got it. Now we can move on. We done with that website. So let's go ahead and go here and let's talk about what I found out about the company. So the company research, General Mills does have customers and partners that are listed in the S&P 500. Some notable names include Walmart Incorporated, ticker WMT, Target Corporation, ticker TGT, and Kroger Company, ticker KR. All right. Now, before we look at the charts, let me talk to you about this. Got it. Remember, professionals trade from a computer, not a mobile device. Mobile trading apps are limited and don't have all the features that are available on full trading platforms. Now, let's look at General Mills on the charts. Let's go to the charts. Bam, bam, bam. There we go. All right, so we're looking at a 1 year daily chart. That information is right there. 1 year daily chart. 1 year daily chart for General Mills. There's the ticker in the symbol box. They have a 52-week high of $54.18, 52-week low of $31.75. So this was June 2nd. This one was July 2nd. It wasn't June 2nd. It was July 2nd. The date is down at the bottom. It says 7/2. If you can't see it, it's right under where it says General Mills. And then right over here, the 52-week low happened on June 4th, which we talked about. Just want to give you a visual of it. Here is where we are now, and that's today's candle, this red one right here. And that's actually a candle pattern, but we're going to come back with that in a second. Let's go to the 10-year weekly charts and see if we can find some technicals. Guys, this look nasty. Look at the downtrend on this mug. So this looks like consolidation that faked people out. Looked like it broke out to the upside and then it was like, psych, boom. And that was in 2024. It started consolidating right up in here at the end, like mid 2023, because it came back up to that range. But it came down off that 10-year high, which I didn't mention. So it has a 10-year high of $90.89. General Mills does have a 10-year high of $90.89. They have a 10-year low of $31.75. Now, what's interesting about that, guys, is that the 10-year low is also the 52-week low. So it hasn't been this low in over 10 years. So this is crazy. So in 2018, the lowest it was before what happened this year, the lowest price point was $36.42 besides the lows it made this year. Hope that makes sense. All right. So now we're looking for some price levels of support and resistance. Immediately, I'm seeing this one right here. So right there, I'm seeing resistance. Now I call myself cleaning this mouse. It's jumping around. There we go. At $41.06. And $41.06 is also around a psychological price level of $40. And they closed today at $37.57. And then we're going to zoom in. I'm looking for one more price point as support and resistance. Yeah, guys, right here. So that price level is going to be $45.40. So that's another psychological level, like around $45. So let me take me off the screen and zoom in so I can show you what I'm talking about. So immediately, let's get this out of the way. Let's talk about this first. It's trading below the 200-week simple moving average. That's going to be your dashed white line right here and your dashed green line, which is going to be hard to see. We're going to have to zoom in and then I'll point it out to you. So let's zoom in on these price levels over here. So this is in 2018. This dashed green line is going to be your 9-week simple moving average. So I chose this price level because it was holding as support right here in 2018. There's the date. That price level of $41.06. Then it was a significant level that it closed above. It kind of came back and tested it with this candle here, and it held above it here. It held above it here. Not perfectly on that line, but it held above it there. So that's why I picked that price point. And then 45.40 really did stand out a lot because it held as resistance here. Now, remember, these are weekly candles. It held as resistance here. It was being tested as support here. Closed below it here, came back and held as resistance here. So it really was struggling with that $45. Then when it came back and tested it here, once it got above it, it was no turning back. Okay, so that's why those price levels are significant in what I'm seeing. And then here, that $54.34, we can see that it was holding that support and resistance here as well. All right. So that's 2018 price levels, between 2019 and 2017 price levels that I'm using to do those technicals. Now I want to zoom in on this year's weekly candles. Okay. So here's 2026. Let me drag this over, and there's 2025. So here is this week's candle. Now it's going to be 4 days in this candle because the market is not open tomorrow. But we can see that this candle right here. Okay, so what week was that? That was June 8th. That was the week of June 8th. That candle was one of the first candles out of, now I'm gonna show you how I'm gonna do this. The tool I'm gonna use the trend line tool. This was the last candle to close above the 9. And that's where it closed at. But we're using this tool to count. So it took 119 days, because these are weekly candles, for a weekly candle to close back above that 9-week simple moving average. It took a while. And now that it closed back above it, you had this candle here, the following week, close back below it. But once it got back above it, the previous week, it's been trending above that 9-week simple moving average for the last 2 weeks. But this was the first candle to get above that 9-week simple moving average after it created that 10-year low of $31.75, which is also the 52-week low of this year. Okay, we got it. Now let's go over ahead and go to our daily chart for the year. 1 year daily chart. Okay, so the camera overheated. I did not know. I just looked up and seen it. So let's switch over to the other camera. Give me 1 second, guys. Give me 1 second. Cut this one off. And part of the reason it overheated, I don't remember cutting the fan on. That's exactly what it was. I ain't even cut the fan on the camera. Okay, give me a second. I got you. Camera back up. There we go. So here's the backup camera. So we're good until this one overheats. I ain't even had a fan on, guys, on the camera. So I'm not even surprised it overheated. I just need to sit right where I'm positioning the camera. Okay. So we can remove this line. We don't need this here. $34.04. That looks like a significant price level if we're looking at daily candles, because that's the chart we're looking at now. So $34. So it looks like yeah, guys. Yeah. Let's zoom in. So right now, the price is trading below the 200-day simple moving average, and it's trading above the 9-day simple moving average. Now, here's what caught my attention. Guys, these two candles have created a candle pattern right here. And it's on a short-term uptrend. Okay? This is a bullish candle pattern after an uptrend. Bearish. I don't remember if I said bullish or not, but it's bearish. It means that this is a bearish indication. This pattern was also bearish as well, but it found support on the 9-day simple moving average because it started to uptrend, and then it created this 3-candle bearish pattern, found support on the 9-day simple moving average, and then it gapped up. So we put our gaps on the chart. So let's go ahead and let's identify the gap, spread this, and put this on the chart. So we're going to use the rectangle tool, connect it from the high of that day to the low of that day. So this was Tuesday and Wednesday that we connected it to. So we're going to go to edit setting, edit properties. I'm going to turn this yellow to identify that that's a gap, and we're going to extend that over to December 1st. December 1st. There we go. Okay. All right. So we have a gap on the chart, and we need to pay attention to the volume, guys, because the volume plays a key factor in technicals as well. I got to remember to look at this camera. Play a key factor in the technicals as well. It did close above that area of support that we identified looking at the weekly chart at $36.42. Now, if I right click on this to identify this zone, we go to rectangle. So the low of that zone is $36.15. Gap, not zone, the gap. The low of that gap was $36.15 right here. And the top of that gap is $36.53. So another way to identify those price levels, excuse me, on that gap, which is going to spread it out and bring it over. And we'll use, if I put the price level here, guys, it's going to bunch that up because we already have, you see how that look nasty? I don't want to do all that. So I'll remove it. And I'll just edit the property so you can see it. Just one more time. Those are the price levels that identify the high and the low of that gap. Okay. So we got that. And I was saying that this here is a bearish pattern after an uptrend. This is a short-term uptrend. This is a bearish engulfing pattern. The body of this red candle, it totally engulfs the body of the previous candle. That's what that is. So it closed lower than the whole main session of the open and the close. So it looked like it barely moved on Wednesday. If we take out the high and the low, being as so it closed so close to where it opened, it was as if the price didn't move. Then the following day, it opened higher, but it wasn't able to reach the previous high. So we're reading the candle now. Wasn't able to reach the previous day's high. Wasn't able to reach the previous day's low, but it did close below the open and close of the previous day. So that's a bearish pattern. Here's what looks bullish about it. Okay. So now I'm about to break this down so you just don't look at it and you be like, oh, that means it's going to go down. No, there's some other things about it that doesn't make it look as bearish. And I'm going to explain it. The low never came down to actually test that. It never came down to test that previous level of support at $36.42. And it didn't fill any of that gap that it made from the previous day. It didn't feel any of it. The other thing that stands out about this, guys, is the volume. Okay. The volume is extremely. Wait a minute. It's not extremely low. It's not extremely low, but it's a big drop off in volume. So we'll talk about it. We'll talk about it. Let me get the stock quote so we can move on because we're spending way too much time on this. Okay, so go to the settings, cut on my floating data box, and mouse over today's candle. So General Mills opened today at $38. They had a high of $38.15. They had a low of $36.82, and they closed today at $37.57, which was a trading range of $1.34. Now, when we go look at the trading volume, this is what caught my attention, but I didn't read my other label. So they traded 12.7 million shares of this stock today. Okay. Now, when they traded that volume, we need to find out, is that above average? Is that below average? Is that average volume? We need to figure that out. So what we're going to do, we're going to cut off the floating data box, take me off the screen, and then we're going to look at my volume label. So the average trading volume for General Mills, guys, is 7.7 million shares in a daily trading session. Today, they did 12.7 million. So what had jumped out at me, I didn't pay attention to the average volume. I was looking at the fact that this red candle's volume was lower than the previous day's volume. Okay. So the volume for this candle is right here. They did 27 million shares on that candle. Now, that was the day that they had earnings. So it's expected to have higher volume on earnings days. And the earnings were released before the market opened. If we mouse over it, it will remind us of that information. Come on. Let me click on the chart. Did that do it? Yeah. So we can see it was announced at 7 a.m. Eastern time. So before the market opened. So they reacted to that earnings news. And it gapped up. Gapped up on earnings, closed up here. So being as so, this volume, and I know I'm moving slow, guys. I told you guys I had a lot on my mind, but I'm here My apologies. My energy isn't like it normally is. I'm doing my best to get through this live stream. I really am. So just bear with me, guys. So average volume right here, 7.7 million shares traded today. So when we look at this, even though it's below the volume that we had on Wednesday, it's still above average. We have to factor in, let me put me back on the screen. We're factoring in that it's normal to have high volume following earnings anyway. So it's not really a drop off in the sense that, what do you expect? It was earnings, so they're going to have higher volume. So this red candle day isn't as bearish as it looks to be when we factor that in, because they still had above average volume. And on that above average volume, it was not able to maintain the lows on that candle because it has a long wick, and it wasn't able to fill part of that gap, and it wasn't able to come down and test that area of support at $36.42 on above average volume following earnings. You see what I'm saying? That's what I'm getting from that. So let's finish talking about the volume and we can move on. So when we go over here and look at the volume rank percentile, out of the most recent 252 trading days, guys, only 18 of those days had higher volume than today's volume on this candle right here. And then another way to look at it, the volume rank percentile is 92.9%, which means today's volume is higher than 92.9% of the most recent 252 trading days volumes. Okay, so that's significant. That's another way to break that down. That caught my attention. Okay, here's what I mean. Ooh, I'm glad that we got this percentage thing, because this helps break this down. You see, now when we look at this high percentage right here, right, 92.9%, it doesn't look like it's too much higher than average, like when we looked at it that way. So 7 and 7 would be 14. So it almost did double what the average volume is. Today, they had 2 times average volume, basically, just shy of it. But this volume indicator helps us determine how rare that is to have volume at this level. So it's higher than 92.9% of the most recent daily candles in a year. So that's significant. So even with that significant volume, it wasn't able to fill any of that gap or come down and test that support. So even though this is a bearish candle pattern, there's other things about that pattern that doesn't make it look as bearish. I hope that makes sense. And then we looked at the higher time frame, guys. So when we looked at the higher time frame, let's incorporate that. It's been trading at lower than 10-year lows. This is a 10-year low. It's coming off of a 10-year low. It's coming off a 10-year low. This is about a month of time right here. And another way for us to get that time, we can use this tool right here. Take this off. Let me zoom in. So it's trading below. This is moving too fast, guys. Bear with me, bear with me. So here's the 200-day simple moving average. The price is moving towards it. The first area of resistance. Listen, let's look at this. So we did most of our resistance, our support and resistance based off the higher time frames, right? So when we did that, we didn't see this when we broke it into the days. So let me take me off the screen and show you what I'm talking about. If we look at where the highs are over here on these 2 candles that I just said was a bearish pattern, it's bearish because it appeared after a brief uptrend. Matter of fact, that's not even the beginning of the uptrend. The beginning of the uptrend is here. Give me a second. It's acting up. Give me a second. The beginning of the uptrend is here. So once this pattern appears, that is what qualifies it as being bearish, because it's appearing at the top of a brief uptrend on the daily chart, right? Now we're going to look to the left and see if it's some price levels that could present resistance. So when I do that, we have a few candles right here that's responding to that $37.64. You see what we just did? So what we did, we connected all 5 of these candles right here. Now those are daily candles. And then we have 2 daily candles here where the open and close are responding to that price level of $37.64. Right here, this candle opened after it gapped up just above that area of resistance. Why am I calling it resistance? Because the previous price was below it on Tuesday. This is Tuesday candle. So when it opened above resistance, now it's supposed to hold that support. During that session, it came below it, but it closed right back above it. It went up a little bit during that session. I don't know if that was the end of the day or the beginning of that day, but we know it went above it. But it opened and closed above that area of resistance. So it turned into support. The very next day, it opened at the top of the body on the red candle, and that was today. So that's Thursday. But it closed just below that area of support. So now it became resistance. So that's another thing that happened that makes it look bearish. So you got the bearish pattern and you got the fact that it wasn't able to close above resistance. How is that resistance? I identified that as resistance because it's been responding to that price level over here. The tool is acting up, guys. I don't care how long this stream lasts tonight. I really don't. So if I'm taking a long time, you can make a comment or fast forward through the video or whatever, but I'm going to take my time tonight. So here's the resistance there. Here's the resistance here on these daily candles. So this isn't the first time it had a hard time getting above this $37.64 since it's been in a long-term downtrend. Okay, but now it's beating on a new drum. It looks like it's reversing. Here, it looks like consolidation. It's trending sideways. It's not trending down. Now, after consolidation, it's either going to break to the upside or the downside. And we can see that it went to the downside. So then after that, you have a new consolidation. It fell out of that consolidation range. We see how tight it is. Came down here briefly. Then it recovered back into that zone. Then it broke out of that consolidation. You see what I'm seeing now? I hope so. So this could just be it finding a new level of starting a new level of consolidation before it resumes the uptrend. That's what it could be. I'm not saying that's what it is, but even though that's a bearish pattern, I'm seeing that as the trend may be changing, not just reversing like it's bearish and it's going to go down. It just identifies that it's going to be a trend reversal because there's 3 types of trends. So some people don't know that. A trend reversal just means that it's going to change trends. So if it's 3 different trends and you had it on an uptrend, now that just means that the trend is changing. So if it's changing from uptrend to something else, that means that the trend would go sideways or down. Then once it starts going sideways or down, now the reversal would be the other 2. I hope that makes sense. Because right now it's still in an uptrend. The pattern is telling you that it has the potential to change to a different type of trend. Okay, that's what that means. Breaking that down. We did the volume rank percentile and then I did some extra technical. So we went through that. We broke that down. Let's go ahead and move on. These flies and this heat. I can't even feel the fan now. Give me a second. I hope that works a little better. I'm gonna have to get me another little fan, guys. Okay. All right. So where are we? We looked at General Mills on the charts. Let's go here. And you're like, what's going on? I got to move my camera, guys. Got to move my camera. Got to move my camera because we're using the backup. I didn't have my fan on the other camera, so it overheated. It overheated. Man, we spent the hour. We not even halfway through this show. I don't even know how long this show gonna be. I'm not going at my normal speed. All right. Anyway, let's go. Let's just get through it. Let's get through it. Quick analysis. Use the chapters, guys. If it's something specific you want to see and you've already stuck around this time, when we do the replay and I had this, you can go ahead and use the chapters. I ain't mad at you. Just skip exactly to where you want to see. Skip exactly to what you want to check out. All right. So we're going to take this off. Let's talk about this. We're not doing that. Okay. Back to the community. I would appreciate it very much if you guys share the stream, hit the like button, subscribe, and if you wish to send a monetary gift to support the content, Cash App and PayPal links are down in the description as well as on the ticker on the screen. All right. The S&P 500 index, that's what we're about to break down now. Okay, let's look at what the S&P 500 index did today by using the SPY ETF. This ETF gives investors an opportunity to participate in the broader U.S. market by allowing them to own a percentage of each company inside the S&P 500 index, okay? So we got that. Now let's go back to the charts. Here we go. All right, so let's go up here to the symbol box and type in the SPY, SPY. Bam. Ooh, it's looking nasty, guys. So let me take me off the screen. Let's check this out. So the SPY has a 52-week low of $616.61 and a 52-week high of $760.40. Okay, so let's zoom in and focus on the price action that's going on right now. Give me a second, guys. It's gonna take me a minute. Ooh, this looks so nasty. Oh, I know it looked busy. I know it looked busy. And if you don't have the eyes of a person that reads charts and you still learning, this may look a little crazy to you and you may be wondering like, why he's saying that look nasty and all that other stuff. That's because it is, guys. This price action that I'm seeing on the screen ain't doing nothing but proving what I've been saying for the last 2 weeks now, which is they're rotating. Institutions are rotating their money. They're moving their money. I've been trying to tell people that the information technology sector is overheated. That's what's been leading and running the S&P 500 up. That's what's been running it up. The leaders in the information technology sector, which is something I'm going to be talking about this weekend on Sunday when we do the weekly recap live. So when we look here, let me use the drawing tool. It looks like a bull flag. You see that? Looks like a bull flag. But what's going on is you have the leaders pulling back and you have the laggards starting to lead. So it's really consolidating, guys. It's consolidating. It came out of the range a few times, came out here, but the price keeps returning back to this range. Let me use the drawing tool. The price keeps returning back to this range right here. I just drew on the chart inside this box. That's where it keeps, it'll pop out, but it's coming right back in that range. I know I'm drawing a lot of stuff now. I don't care, but that's what's going on. So the point is, let me find this. Let me erase this. Let's erase all that. And let me put the box there again. The price is consolidating. The majority of the price action is happening within this box. I'm extended a little bit further. But the reason I chose those two levels is because of these long wicks and because of the price levels that we have on the charts. We can even make this a little wider. Let's do it from here because I want to use the levels on the screen so to make it easier to identify. So if we use that $750 price point, it's acting up. Give me a second. If we use that $750 price point, right? And then we extend that over and we bring that down to that $727.82 price point, I'm pointing at them. That will create that consolidation box. This was when it was still part of the uptrend, when it made that 52-week high. Okay. I'm including the prices over here. I should have extended a little bit further. This is where I should have started the box at. I should have started the box back here, because this counts as part of the consolidation range, because those prices are included in that level. Does that make sense? I hope it does. It's included in that level. So all of that is a consolidation range. It counts. But notice that now that it created these highs, they did not make new highs. They weren't able to get up here. So now here's a third high. That's a lower high. So it's making lower highs, but it's making higher lows. If it wasn't for this long wick down here, then the shape would be like this. That's funny looking. If it wasn't for this long wick, these, you know what I'm saying? I shouldn't have said that. Let me clean this up. These highs are lower than this high. So it's making lower highs. So if it's making lower highs, it's sloping down from the top. That's what I'm trying to say. Okay. Now it's making higher lows. If we just look at this low and these lows, this low is a lower low. But then you see a higher low. So if it wasn't for this long, stupid wick right here, then you would also have an uptrend coming from the bottom. So you got a downtrend coming from the top. We're creating lower highs, but it's making higher lows. It's like a point. This is what's making me think that the S&P 500 is consolidating. It's not actually pulling back. People are calling it a pullback. That's what I think. They're just calling it a pullback, but it's not a pullback. This is a time frame we're looking at as well. So let's identify this time frame by using this tool right here. We're going to use this trend line tool. So we're going to connect this candle to this candle, and it's going to tell us how many days that is. So that's about 2 months. Now I did connect 2 days before that actual consolidation range, but I believe that the institutions have been moving their money out of the information technology sector into other sectors before the consolidation showed up on the charts, if that makes sense. Now that it's showing up on the charts, it's hard to ignore. Now, that's why the price is moving sideways, because they're moving it from one place to another place inside the same instrument. But because you have different weights inside the S&P 500 index, it's not moving the way you think it should. It's moving over into other industries that are undervalued, that don't have the same weights as the leaders. So as these market caps start to adjust because they pulling money out of some companies and moving them over into others, the weights will start to change and it'll start to balance out. But as far as right now, that's what I'm seeing on the charts. It's moving sideways. It's consolidating. So the stock has reversed. The ETF has reversed. So it reversed from an uptrend to consolidation. Now it's going side. The trend is sideways. Let me pull this back. And now that it's trending sideways, we can see that the price action is stuck between this range of $749.88 and $744.44. Okay, so today's candle opened higher than the previous open, but it closed lower than the previous open and close. It opened higher than the previous open and close. So this is Wednesday's candle. It opened above both of those, but during the trading session, it came up and made a higher high than the previous session. It also made a lower low compared to the previous session. But I'm paying attention to the body part of the candle, guys. I'm paying attention to the body. The body of this candle has a lower close than both the open and close of the previous candle. That's what I'm looking at. And that close on this red candle is just above that area of support. It didn't close below it, even though it came all the way down here to test the 9-day simple moving average. Okay. So I don't think that the S&P 500 is going to start just going down and create a downtrend. I think the trend has already changed. I believe the trend right now is a consolidation. It's trending sideways. That's what I'm seeing when I'm looking at the chart, because I'm including part of the price action when it was trending up. It's in a consolidation range. And I believe that the consolidation range is because institutions are rotating their money out of the information technology sector into other sectors, which is something we're going to cover tonight. So I spent a lot of time on this compared to what I normally do on the SPY as well. But hey, now let's go ahead and open up the floating data box and let's get this quote for this ETF. All right. So the SPY opened today. Let me get over here. I keep going over here with the cameras here. Let's do that. The SPY opened today at $747.40. They had a high of $751.31. They had a low of $740.03, and they closed today at $744.78, which is a trading range of $11.28. Now, when we look at the trading volume, guys, they traded 57.5 million shares of this ETF today. So what we're going to do, we're going to take this floating data box off. We're going to take me off the screen, and we're going to look at the volume labels, and we're going to actually put the SPY ticker up on the screen, which I wish I had did sooner, but hey, we got it. So here's the average trading volume in a daily trading session for the SPY, 73.3 million shares. Okay, they're trading below average. They're trading below average. So today they traded 57.5 million, which is higher volume than yesterday. So this doji candle right here with that small body, they traded 40, that day had 47 million shares of this ETF traded. So they traded 10 million more than they did yesterday with this larger body candle. Okay. But it's still, both of these days are still below average volume. Both of those are still on low volume. Okay. And now we can even talk about how low, because now we can use our volume rate percentile tool that I was talking about. So out of the most recent 252 trading days, guys, only 64 of those days had lower volume than today's volume. And now if we look at the percentage out of the most recent 252 trading days, today's candle's volume, daily's volume, was only higher than 25.4% of those candles. Okay. So it wasn't a lot of volume, at least being traded on the SPY ETF. All right. But I think the trend on the SPY has definitely changed. I believe it's trending sideways. It's not on an uptrend no more. But I think the reason it's trending sideways is because money is moving from one sector and certain industries over to other sectors and industries. That's why it's kind of balanced out and moving sideways. It's just moving money from one place to another. Okay. So let's go ahead and move on. We talked about that. Let's go here. So we take that off. Bam. Go here. Go here. And move this back. All right. All right. All right. Now, all right, sector rotation tracker, time to follow the money. Let's look at each sector inside the S&P 500 index to see how they performed today. Let's do that. Now, here's where this is going to prove what I'm saying. This is where we about to really get into the nitty of the gritty. All right, so let's go back to the chart. Let's push the camera back over this way. All right, this is where we really going to get into the nitty of the gritty, guys. This is where we're going to get into it. All right. So let's switch this over to my rotation tracker tool. Here we go. And I got to hurry up. No, it's the weekend, so I got time. They're going to hold the numbers that I need. Okay, guys. So I know this is busy. If this is your first time seeing this, let's put the right thing on the screen. and the Thinkorswim platform thing. All right, so we're looking at, that's not the, yeah. Sector performance, SPX. All right, so guys, the SPY is flat. The SPX, the S&P 500 index is flat. It's flat, which means it didn't move. Now, when we looked at the charts, it was red, but we can see this right here. Even though it was a red candle, it closed so close to the open of the previous day is as if it almost didn't move. So the percentage, it only changed by 1 cent, guys. You can see it right there in the box. The price changed 1 cent. So it's as if it didn't even move. The S&P 500 index. So energy, and we're just looking at today's performance, okay? So basically the S&P 500 index itself didn't even move. It closed right where it opened at for the most part. And let's double check that because we looked at the SPY. We got time. I ain't in no hurry. And then we'll come back to this tracker tool. I just want to make sure. I just want to verify this. So go to Pro Market Closed. And then we're going to put in SPX. Okay. So when I go up here, I'm reading this right here. So this is the week. That's why we're looking at a week. If we go to the daily, there we go. So here's the daily chart. And now we go to the floating data box. The open and the close. It's not a 1 cent difference. So why does that say plus 0.1? But the percentage change is flat. Because that's a small percentage. I don't know. I got to do some research on that. I'm not going to hold the show up any longer than I already have. Go to rotation tracker, but that's what it's looking at. So it's saying it didn't move. The percentage change from yesterday to today is so moderate or so small, it didn't even move it 1%. It didn't move it 1% up or down or even 0.1%. That's what I'm getting from that when we're looking at this. Let's take the floating data box off. And let's go ahead and go through these. So for today, just for today, energy is up 0.8%. Materials are up 1.9%. Industrials are up 0.3%. Consumer discretionary is down 1.8%. Consumer staples up 2%. Healthcare up 2.6%. Financials up 1.5%. Information technology down 2.7%. Communication services down 0.1%. Utilities up 2.2%. Real estate up 1.1%. Okay, now let me pull this up on the screen. Now, I told you guys I was going to start doing this to make sure that I don't miss something or say something wrong. But anyway, we're good. So the index itself, the S&P 500 index, the ticker SPX, it didn't change. So no change. It's flat. That's what we're looking at here. So let's think sideways again. Remember what I said about consolidation? It's moving sideways now. The S&P 500 index is flat, didn't change. But when we look at the different sectors today, the biggest gaining sector is the XLV healthcare ETF. So let me break that down in a second. This represents the healthcare sector inside the S&P 500 index. So that camera overheated too, huh? And I'm just talking away. Give me a second, guys. Let's switch to the other camera. Let's switch. Bam. All right, camera back up. There we go. I'm glad I looked up. We had a fan on, so this other one should last long. If it overheat, then we just switch to the other camera. All right, so the biggest gainer as far as the sectors inside the S&P 500 index, guys, is healthcare. They went up 2.6%. The biggest loser, I can look here now. The biggest loser is information technology. They're down 2.7% today. Okay. Now, normally I do this on the weekend. I do this on the weekend where we look at different time frames, but I already told you earlier that this wasn't going to do nothing but basically support what I've been saying about the sector rotation. This is just talking about what happened today. This is not the stats for this week. So I'm going to show you how we can look at what's going on for this week, okay? So what we're going to do now, just put got it. Where is this at? No, there we go. All right. So what we're looking at now, we want to look at the gainer for the week. And we want to look at the loser. We can't see it. Give me a second. Pull this up. That's not how you spell loser. Give me a second. And wait, oh, come on now. Don't do all this. Don't do all this. Click this, go to 100%, pull this over. Okay, then go back to text. You know what? I'm gonna have to expand this because it's acting stupid. Let's just do that. Let's spell loser right. L-O-S-E-R. Then we're gonna do the W for the week. And what we're gonna do, we're gonna change this tracker to give us, the most recent 4 days because the week has ended. We don't have a market on Friday. So we want Mondays change, Tuesdays change, Wednesdays change, and Thursdays change to all calculate to give us an average for this week. So what I'm going to do, I'm going to go up here and I'm going to change this from 1 day to 4 days. 4D, click OK. And now we're going to get an updated stats. And now let me pull my whiteboard back up, or blackboard. So now we're going to look at this. So this week's performance, the S&P 500 index is up 1.8%. Energy is down 1.2%. Materials is up 0.8%. Industrials is up 1.5%. Consumer discretionary is up 2.4%. Consumer staples is up 0.3%. Healthcare is up 2.1%. Financials is up 3.8%. Information technology is down 0.3%. Communication services is up 3.2%. Utilities are down 1% and real estate is down 1.2%. Okay, so based on the performance for this week, guys, the financials sector, XLF, and this is going to be the State Street Global Advisors ETF that represents all of the sectors inside of the S&P 500 index. That's what I'm using. So this is going to be financials. And they're up 3.8% on the week. All right. The biggest loser, it looks like it's a tie between real estate and energy. But real estate, I can see that real estate had a bigger loss. It was they're down 1.24 and energy is down 1.15. So energy will be XLE. XLE. Guys, that's not what we put in there. It's real estate. We said real estate was the one that was down the most. So real estate. And they're down 1.8%. There we go. But guys, we got a new leader this week. That was my point of doing all this. We see that information technology did not finish positive this week. And then financials is the leader for this week. Now, if we really pay attention, who was number two? Who was number two? Because we just looking at the best and the worst. Who was number two this week? Who was the second gainer? Give me a second. It was communication services, XLC. I don't even know if we're going to have a 3.2%. So my point of doing this, the top two, financials and communication services, and 3.2% and 3.8% is significant for the week performance. And now remember, it's only 4 days. This wasn't even 5 days in this week, just 4. So they moving over into those sectors heavy. Now, the reason why technology isn't tanking is because the leaders in technology are in two of the industries. It's two main industries that's been leading the whole information technology sector. So there's other industries inside of the information technology sector that's not doing that bad. And you have another market cap that's doing well inside of one of those industries as well. But we'll talk about that when we go over there. But this is something that we go into more detail about on the weekend on the weekly recap live. I'm just feeling like going into more detail on this stuff tonight. And I'm moving slow tonight. We moving. Let's just keep going. So let's go here, go to Cam. We followed the money. All right, now let's look at the S&P 500, biggest gainer and biggest loser. And first we're gonna look at the loser so we can end the night on a high note. And actually, I'm gonna do a little trick tonight. I'm feeling good. We're gonna do something tricky. We're gonna do something tricky tonight. All right, so let's go to pro market close. There we go. Pull the charts back up so you can see what's going on. Yep. Okay. Look at these flies. All right. So where we're going to the market watch tab. Oh man, I forgot about this. All right. So let's break this down. But you're like, what's going on? Why are you skipping that one? You see right here where it says CrowdStrike, they lost 74.9% today. So this means they almost lost 75% today. That's not true. It's not true. And I'm going to show you why that's not true. We're going to go over to the charts. Here's what happened, guys. For some strange reason, Charles Schwab has a delay when these companies do stock splits. That's the icon down here at the bottom. So what they did, they split the shares up to where for every one share someone had, they divided it equally into 4 shares. So this doesn't dilute the share count. If they had one share that was worth $100, now they have 4 shares that's worth $25 each. So they still have the same amount of value. They just are in separate pieces, and that brings the share price down to make it more affordable for other investors. That's basically what happened. Charles Schwab's system is not updated yet. So their system makes it look like that the company lost 75% of its value because it's been moved over into 3 other shares. It's only counting the one share as $25 as an example, or 25%. 25% of the actual share value because it's not counting the other 3 accurately. It's not counting it accurately yet. It should be updated on Monday. So the way I figured out how to see the accurate price, because if it's wrong on Thinkorswim, what I like to do is go to Yahoo Finance. So here's the Yahoo Finance website. Pull this back up. So what I will do, I go to Yahoo Finance, and it was CrowdStrike. So we go up here, CRWD, CrowdStrike Holdings, select that, and then this will give you the correct information. So they went up by, the net price change was 79 cents. They went up by 0.41%. And they're even going up after hours. Okay. So here's the accurate stock data. So this is the tool I use as a backup if a split happens and I know that Thinkorswim has it wrong. So that's how I do it. So I go back to the Market Watch tab. So the biggest loser is actually not CrowdStrike. The biggest loser is Sandisk, ticker SNDK. Now, here's the thing. Sandisk been showing up on these live streams all the time, but most of the time they've been the biggest gainer. They've been the biggest gainer. They just been going up and up and up and up. And this is part of the reason why I feel like the information technology sector is overheated and it's extremely overvalued, because now it's dropping significantly, guys. It's dropping. People losing a lot of money if they got in the Sandisk late. So they've been the biggest loser, I think 2 or 3 times this week, but let's get into it. So they lost 14.13% today. Their previous close was $2,032.22. They closed today at $1,745. So they lost 14.13%. Now let's pull out a calculator and do a hypothetical. Okay, so let's say if someone invested $4,500 and they lost at 14.13%. We're going to negate this and then we're going to turn it into a decimal. They would have lost $635.85 of their investment. If we add the $4,500 back to it, they would be left with $3,864.15. Bada boom, bada bing. Now what we're going to do, we're going to go over to the Analyze tab, and we can see that Sandisk is inside of the information technology sector. So now we're about to check that sector performance, that industry performance, and the sub-industry performance. And this is also going to support what I'm telling you about them moving out of certain sectors and industries and moving into other places, okay? So let's go over to the Market Watch tab, then we're going to go over to the Visualize tab. Right now we have the S&P 500 index pulled up on the chart on the screen, not charts, on the screen. And what we're going to do, we're going to go to the information technology sector, and that's going to be right here. Let me expand this right here. Bam. So now this is all the information technology, but now we're looking at different industries. Guys, this is the semiconductor industry. This is what's been running hot. All of it's losing money today. Not one of them had a gain today. Micron is down 5.49%. This is the industry inside of the information technology sector I believe that institutions are pulling their money out of. It's showing up right here. If we do our research, it's showing up. You can see it. So let me go back to information technology. Now here is the other industry I think they're pulling out of. Here is the technology, hardware, and storage and peripherals. Now, it doesn't look that bad at first glance because Apple's market cap is so big. So with Apple's market cap being as big as it is, it looks like this whole industry is green, but that's just one company. So now when we go inside of it, how many companies are actually inside of this industry? Guys, I got time tonight. I got a little time tonight. So I'm gonna show you how we do this. If we didn't want to count it, we could do this. We could go up here to the scan tab. We could go up here to stock hacker. And I'm going to clear this out. Let me clear this out. How can we reset? There we go. Yes, reset this. Bam. So we don't need these filters. Let me put me back on the screen because I can be back on the screen while I'm doing this. So what I'm doing, I'm going to filter out the companies I don't want to look at. So what we were doing, we were looking inside the S&P 500 index. So that's scan in. Now I wanted to just pull certain things. So I'm going to use intersect with. So what we were doing, we were looking inside the information technology sector. So we go here, but then we want to look at the technology, hardware, storage, and peripherals industry inside of that sector. So when I select that and I click scan, it's just going to pull those companies. So it's saying showing 9 of 9. So it's only 9 companies in there. And now that we have them pulled up, we can use this filter right here to see there's Apple right there at the top. So Apple gained 4.4%, and now we can see how much the other ones lost and what the companies were. So I'm giving you a lot of game tonight. So if you stuck with me, I'm giving you a lot of different things you can use as tools tonight. So we can go back to the Visualize tab, go to Market Watch, and then we're in the Visualize sub tab. So all we did was break what we're looking at now down in a list where we could read it quickly instead of having to mouse over these things individually and read them separately. That's all we did. So going back out to the information technology sector, this industry, technology, hardware, storage, and peripherals, and semiconductors, I believe institutions are pulling their money out of and putting them in other sectors and other industries inside the information technology sector. That's why the information technology sector isn't tanking, because they're putting their money into software. You got Microsoft, you got Palantir, you got Adobe, you got a lot of other companies inside the information technology sector in different industries that are undervalued, or at least in fair value, that they can move their money over to because they've overvalued those in particular industries so much. So Sandisk is inside of the technology, hardware, storage, and peripherals industry. And here they are right here. And the sub industry is the same thing. It's the same name. So here we go. So you can see it. Here's the information technology sector. Here's the industry. Here's the sub industry. Now let's go back to the Analyze tab. And before we go to the Sandisk website, let me tell you guys, I'm behind tonight. We covered a lot of different stuff. So I'm going to do something a little bit different. Here's their website. Here's the link to their website. I'm going to read a little bit of this description, and we're going to go super fast on this website. Sandisk Corporation develops, manufactures, and sells data storage devices and solutions using NAND flash technology in the United States, Europe, the Middle East, Asia, Africa, Asia, and internationally. We got it. Now, what we're going to do, we're going to go to their website. Take that off the screen. We got that up. Okay, so let's go to their website. That's going to be 3. All right, I'm just going to go to where we find what we're looking for at. We're not doing a whole bunch of reading tonight because I need to move a little bit faster. Okay, so here we are on the home page. Scroll down to the bottom. Just let you see what's on here. Okay, now here are the links. This is where we need to go. Take me off the screen. We're going to go to About Us, Careers, and Investors. Here's About Us. So this is where we would look for the mission, who we are, principles, and things like that. Mission statement, vision, purpose, and things like that. Here's leadership. Got it. All right. So now we're going to go to careers. Careers are where we're looking for benefits. The link for the benefits are right here at the top. We've seen this website so many times because, like I said, they were the biggest gainer. They were the biggest loser. Okay, we moused over the whole, we browsed over the whole website. Let's go up to benefits. I'm waiting on it to load. There we go. Helping you thrive. We're not going to read all of this. I just want to show you where they are. So here's the benefit section right here. All right, now let's go to investor relations. Investor relations right here where it says investors. Opens up a separate website. Blow that up. Zoom in. We're good at 150. Put me back on the screen. And now we're looking for the stock information. I'm browsing over this page, and then I'm going to click on it and show you where we're going. Right here, stock quote and chart. Here we go. Now, here's one of those situations where I believe they outsource the information for the data that shows up on their website. It's a delay. I don't think that this is the only company that uses whoever this data provider is. So what I do, I talk to you guys, try to keep you busy where it's not like you're just sitting there waiting on this to load up. And then once it's done loading, the chart loads up. So there we go. There we go. And here are some other tools. So let's go over here and talk about what I found about the company. We didn't spend a lot of time on the website, so that is a beautiful thing. We have the chart there. I mean, the ticker there. All right, so we go here. So Sandisk Corporation, ticker SNDK, when it comes to their goods and services, they manage NAND flash memory manufacturing across the enterprise, cloud data center, and consumer electronics markets, offering solutions such as, number 1, complete enterprise solid state drive options, including high capacity enterprise drives and custom flash modules for massive hyperscale data centers. Number 2, scalable data storage products, including portable solid state drives, memory cards, and USB flash drives for global consumer electronics and retail markets. Number 3, an optimized memory infrastructure systems tailored for high performance artificial intelligence storage, ultra low latency server computing, and high density industrial edge arrays. All right, looking at their S&P 500 customers and partners, notable names include NVIDIA Corporation, ticker NVDA, Microsoft Corporation, ticker MSFT, and Hewlett Packard Enterprise Company, ticker HPE. Okay, now let's go to the charts. Here we go. Bam, got them up, put the right disclaimer up. We're good. Now, because we've covered Sandisk so many times, we already have some technicals on the charts. And guys, they're doing what I was talking about. This is not sustainable. So let's go to the 10-year weekly chart. So the 10-year weekly chart, guys, they've only been their own ticker because they broke off. I can't remember what company they broke off from. They either broke off from Seagate or Western Digital. I can't remember which one, but we got time. Let me do that real quick. Let me do that really quick. So how I can do this is put me back on the screen. Put me back on the screen. Let's go here. Bear with me, guys. I want to do this right. I want to do this right. So I'm going to tell you what I'm doing. I'm going to ask AI, who did SNDK, SNDK, branch off from STX, so that's Seagate, STX, or Western Digital. I think that's WD. Let me double check. So we go to the charts. When we go to the charts, we go to analyze. No, we go to market watch, visualize. Western Digital, the ticker is WDC. It's WDC. WDC. All right. And then ask. Here we go. All right. Blow this up so you can see it. Collapse that. And we'll read this together so we can get this information. Zoom. That's cool. Sandisk branched off from Western Digital. The corporate, we don't need to read all of it. That's the answer. So it was Western Digital. So before, in order to invest in Sandisk, you had to invest in Western Digital. They made them their own investment in 2025. So they started off at a low of $27.89. This was in 2025. Guys, they shot up to over $2,000. This is the 2-year high. Now, this is my 10-year chart. This is my 10-year chart, 10-year weekly. Come on. This is my 10-year weekly chart. But because they branched off and became their own ticker, SNDK, in 2025, this is only going to cover 2 weeks worth of data. I hope that makes sense. So here's their 2-week low of $27.89 and their 2-week high, 2-year weekly high of $2,354.39. Guys, this is the same pattern I was talking about that appears at the top of an uptrend. That's a bearish engulfing pattern. Let me take all this stuff off and zoom in and we can talk about it real quick before we move on. So let's zoom in. Now, the bearish engulfing pattern basically means this. It appears at the top of an uptrend. This was clearly an uptrend on the weekly chart, okay? The body of the red candle is bigger than the body of the green candle. It engulfs the red candle. You can fit this green candle inside the red one. That was a bearish indicator that the trend should reverse or change. Now, reversal and change does not mean it goes from an uptrend to a downtrend. It means, hey, the trend could potentially change. So if it changes from an uptrend, there's 2 other trends. It could change from the uptrend to a sideways trend or a downtrend. Right now, it's looking like a trend change. I can't say it looks like it's a downtrend yet, but it looks like a trend change. The reason why I couldn't tell you, feel like it's actually a trend change to the downside is because this week it was able to close right there on the support of the 9-week simple moving average. So let me zoom out and show you what I'm talking about. So the 9-week simple moving average is this dashed green line on the weekly chart, okay? Now, what price level is that? That price level is going to be right here. You can't see it because the price closed so close to it, the bubble isn't on the right-hand side of the screen. So another way to see that is to go right here, cut on my floating data box, mouse over that candle, and we can see that the SMA is $1,744.83. And today they closed at $1,745. So they closed just above the 9-day simple moving average, okay? They closed just above it. Now, if it had closed below it, I would have said it would look more bearish. But since it closed right above it, it's not as bearish as it would have been if it would close below that level of support. It still looks like it's clearly a trend change, though. But I don't know if it's sideways or an actual V where it's coming straight down. But boy, it's not pretty off that high. So another way to look at that, let's use the trend line tool to break down how much of a change this is. Come on, mouse acting up. Wow, it's never taken this long to do what I needed to do. There we go. All right, so what I want to do, what's the percentage change from the 2-year high down to this week's close? Guys, that's a 25.88% decline. So Sandisk lost 25% of its value from that 52-week, from that high, from that 2-year high to this week's close. It's lost 25.88% of its value in a matter of 2 weeks. Crazy. So losing 25%, another way to put this in perspective, let's go to AI. How much gain be necessary to recover from a 25.88% loss? So this is where people get tripped up too. They think that if you lose 25%, you need a 25% gain to make it back. That's not how that works. So in order to recover from that 25.88% loss, that stock needs to gain 34.92% back to break even. And it was already trading over $2,000 actually. Okay. So that's important to know. So let's get out of there. Let's go back to the charts. And this is just the loser. We got to cover the winner tonight. Oh man, come on. I can't believe I'm taking this long. Oh man, yeah, this bearish. When we was looking at the week, guys, it ain't look that bearish. I ain't gonna lie to you, it didn't look that bearish. But as soon as I seen this daily chart, oh yeah, this is down. This is a V, guys. This is a clean V. This is a V. This is up and down. This is a V. I'm shocked that this daily candle right here came as close to the previous high as it did. But it had a huge gap down before it bounced up there. Look at this gap. Look at this gap. This gap from this low to this high. And then for 2 days, it traded below the 9-day simple moving average. Then it gapped back up. Now let me make these yellows, because people know when they watch my live stream, yellow mean gap. Now those gaps have been filled, but I'm just illustrating to you what happened. So as we can look through this. So it gapped down off that that crazy high, off that 2-year high, 52-week high, traded for 2 days below the 9-day simple moving average. Then it gapped up to retest that price level. It came real close to it. The high of this green candle is actually $2,348. So it was like $6 shy of the 52-week high. Okay. Since then, it's been making lower highs. Let's remove this drawing. It's been making lower highs. This is a lower high. It wasn't able to get up here. This is actually a lower high too, because it wasn't able to get above the high on the 52-week high candle, right? So now this candle is a lower high. And this is today's candle. Guys, it's in no man's land, and it had crazy volume today. This looks bearish. It looks so bearish. This is what I'm gonna do. I'm excited. I'm excited. I ain't gonna lie. I'm excited. I'm so excited that I'm looking for something and I don't know where it is. Here we go. This is what I wanted to. This is bearish. Okay, bearish. That's how excited I am. I'm gonna put it on the chart. It's bearish, guys. I can call it now. That's bearish. Okay, and we're gonna add volume into this. Now, support and resistance, maybe, okay? If we wanted to put a line here, it would be based off of these candles. So if we put a line there, we can see that it briefly held. Let me show you. Come on. Briefly held as support on these two candles, that candle and that candle. Then it held as resistance on this candle and that candle. This candle closed below it. Kind of held as support on that candle. I know that's a lot of arrows. I'm going to erase all of those, but I just wanted you to see what I was talking about. All right. But it came down to test it here. It recovered a little bit, but it bounced off that support based off of what I saw over here. That's where I found that support level at to get this price. And we can see that that's kind of where this low tested. But based off of what it's going, all the people that purchased this stock that have long positions above today's close, all of the people in here are losing money right now. That's a lot of people that's trapped. So if these people are panicking, as the price starts to recover, they're going to create selling pressure trying to get out to try to break even, because they've been terrified that they've been losing money getting trapped all the way up here, guys. Okay, so that's how that works. Thinking about the emotion that traders are going through and experiencing in the charts. That's what we're looking at. Their emotional response to it. So let's get this stock quote and let's talk about the volume. So Sandisk opened today at $2,043.80. They had a high of $2,052.54. They had a low of $1,693, and they closed today at $1,745. Guys, these numbers don't even have cents on them. Like they're that's crazy. The low and the closed specifically on a dollar amount. It was flat. You see how the other one, like the high and the open, had change? Man, that's crazy. Okay, so the trading range was $359.54. Now, when we look at the trading volume, guys, they traded 17.3 million shares of this stock today. Now, remember, this stock is trading in the thousands, so you're not going to have a lot of people trading these shares. Think about it like that, okay? But we still need to find out what the average trading volume is for this company. So we're going to take the floating data box off, take me off the screen. The average trading volume for the Sandisk, the average trading volume for Sandisk in a day, guys, is 11.9 million shares in a daily trading session. And today they did 17.3 million. So that's definitely above average. We can see that this red candle right here that looks like it was indecision because it's moving like in a tight range, that didn't cover like a lot of space. And it was, and that body of that candle was within those two price ranges we had as support and resistance. The $2,092 and $0.08, and then the $2,021.50. The body of that candle is in between those two price points, which is also filling up that gap. And we can remove those because we don't need those now. So let's go here and remove those gaps because we explain what was going on there, and they've been filled with the price action over here. Okay. But then once it opened here today in that range, it fell through both of those lines of support and came down and tested this level of support at 1682. And we did not have this price level drew on the chart yet. But after looking to the left, we can see that that price level has been tested before. Okay, that's what we got there. Now, yesterday's volume, that volume right there, is near average. Okay, put me back on the screen. Let's finish this up. So out of the most recent 252 trading days, guys, only 55 of those days had higher volume than this candle right here. Now we can look at the percentile. So out of the most recent 252 trading days, today's volume was higher than 78.2% of those candles. Now the price level is also, the price is also trading above the 200-day simple moving average as well. But that's expected because the price ran up so high. The 200-day simple moving average is all the way down here at $703.36. But now when we zoom out and look at it, guys, we can see how much that's wiped out. You know what I mean? It's lost 25.88% off the 52-week high. That's crazy. Not too crazy because it looked like it was, it was overvalued. I think it's going to come down even further. Okay, that's my personal opinion. But let's go ahead and move on. Let's go to the Market Watch tab. Let's condense these. Bam, bam. Let's go over to the Quotes tab and take the loser off. The biggest winner for today, guys, is finally a different company. All right. So the biggest winner is ticker GPC, Genuine Parts Company. We've never looked at this company before. We're going to move faster because I want to get this live stream done by 1 o'clock. I did not know it was going to take this long tonight. So ticker GPC had a gain of 12.92%. Their previous close was $117.40, and they closed today at $132.57. All right, let's do a hypothetical. Pull up the calculator. We've been using $4,500 as an example. So if somebody gained 12.92% on their $4,500 investment, we turn this into a decimal. They would have gained $581.40. Then we add the $4,500 back to it. The total investment would have grown to $5,081.40. Bada boom, bada bing. All right, now we go over here to the Analyze tab. And GPC is in the consumer discretionary sector. So now we're about to check that sector's performance, that industry's performance, and that sub-industry's performance, okay? So now let's go over to the Market Watch tab, and we're going to go to the Visualize sub tab. Here's the S&P 500 index. So now we're looking for the consumer discretionary sector. Double check. Yep, consumer discretionary. So communication discretionary. It's right here. Bam. Guys, I'm seeing more green than red. The red can be deceiving because right here, Tesla has a large market cap and they lost almost 8% today. So it looks like a lot of red, but that's just one company. All right. So GPC is down here. And wait a minute. Why are these look like they in industries by themselves? Am I tripping? Yeah, they in the industry all by themselves. So they're in the distributors industry. And the sub industry for distributors is distributors. They're in the industry all by themselves. So they're in I'm talking fast. They're in the consumer discretionary sector inside of the distributors industry. And that's the only company in there in the S&P 500 as far as that industry. Okay. All right. We got it. Now let's go back to the Analyze tab. Let's talk about the company and then go to their website. And we're going to do the website quickly like we did the other one as well. So Genuine Parts Company, here's their website. Links to the website is also down in the description for your convenience. Genuine Parts Company distributes automotive and industrial replacement parts. We got it. Now, let's go to their website. Here we go. Put me back on the screen. Take that off. We got their company there. All right, cool. We had it zoomed in already. We're going to move fast, guys. We're moving fast. So we're going to go to investors. We're going to go to careers, and we're going to go to, I don't see anything else about. So it's either going to be at the bottom or we're going to have to read it real quick. Okay. So company profile. Established in 1928, Genuine Parts Company is a leading global service provider of automotive and industrial replacement parts and value added solutions. Got it. Our companies, Automotive Parts Group, Industrials Parts Group. Got it. Got it. They have a video here. Links to the video are down in the links to this website are down in the description if you wanted to watch that video and check that out. Okay. So down here where it says corporate, yeah, I don't see any, maybe about like the stuff with the details like purpose, vision, mission statement, and all of that. It might be under career section. I do see culture. So here's 150. Here we go. So about us, we found it. Here it go. Get off my screen. All right, about us. Why are they asking about all this different stuff? Genuine Parts Company. Standing the test of time. In 1928, our founder, Carlisle Frazier, purchased Motor Parts Depot, an auto parts store in Atlanta, Georgia, with annual sales of $75,000 and 6 teammates. He renamed the business Genuine Parts Company, and the rest is our history. Genuine Parts Company. So they have a map here where you can explore different locations, motion. As a leading industrials distributor, we offer access to more than 19 million parts and supplies to help MRO, maintenance, repair, and operations, and OEM, original equipment manufacturer customers keep their essential equipment working safely and efficiently. Napa, UAP, Alliance Automotive Group. All right, guys, it's not standing out to me as far as like the purpose, vision, mission statement. Here are benefits. I see culture. So maybe culture will be something that'll be close to vision, mission, and all of that. So let's click there. Okay, culture. So here's our purpose. We keep the world moving. That's it. Here's the mission, vision, and values. Thank you. Thank you. Thank you. Thank you. They had it under something, under culture. Our mission: be the employer of choice, be the supplier of choice, be a valued customer, be a good corporate citizen, be the investment of choice. Our vision: be the leading global automotive and industrial parts distributor and solutions provider. Our value: serve, perform, influence, respect, innovate, and team. Got it. Advancing our culture. Okay. Giving back with purpose. All right. Now, we're looking for the benefits. So did we go to careers? I'm moving so fast, guys. I'm not even sure. You know what? That's a separate website. That's not where we were. All right, here we go. Careers, right. So this was the separate. Where are the benefits? Career areas. I don't see anything about benefits. About us, I don't see anything about benefits. Culture, locations. I'm going to browse over this page and see if I see anything about benefits. Career areas, our job, company. Benefits right here. View our benefits. Let's go there. Blow this up. They got it zoomed in. We're good. All right. Health and well-being, financial security, work-life balance, career and development. All right. Now, I move kind of fast. Links to the website are down in the description for you to check these out on your own time. I'm going to scroll to these different sections and stop so you can pause the video and read these, or you can use the links to the website. So there we go. All right, now let's go to close all this out. Investors. No, investors. Go to the top. Investors, there it is. All right, do they still have us zoomed in? We're good. Stock information is right here. Browse over this page. Remember, links to the website are down in the description for your convenience. So let's go to the top. Stock information, stock quote, interactive chart, and all that other good stuff. So they have other tools for investors up here. Here's the stock quote. So they have it separate, interactive chart. So the chart is on a different page that loaded quickly. So those are the tools, guys, right there. Investment calculator and all that other good stuff. So let's talk about what I found in my research about the company. So we go here. That's already on the screen. All right. So Genuine Parts Company, ticker GPC. When it comes to their goods and services, they manage replacement parts distribution across the automotive aftermarket, industrial machinery, and commercial fleet markets, offering solutions such as: number one, complete Napa automotive options, including brake system components and heavy duty batteries for professional repair garages. Number two, scalable motion industrial products, including mechanical power transmissions, hydraulic hose assemblies, and industrial bearings for factory maintenance facilities. Number three, an optimized supply chain systems tailored for fast inventory logistics, commercial fleet distribution, and retail store replenishment. Looking at their S&P 500 customers and partners, notable names include AutoZone Incorporated, ticker AZO, O'Reilly Automotive Incorporated, ticker ORLY, and FedEx Corporation, ticker FDX. Got it. All right, now let's go to the charts. Here we go. Go here. We already got that pulled up. There we go. All right. Now, since we've never looked at this company before, guys, look at that big, beautiful green candle. I just can't get everything right, can I? Look at that big, beautiful green candle. There we go. All right. So we're looking at a 1 year daily chart. There's the information right there. Here is their 52-week high of $151.57. 52-week low of $90.78. All right, now we're going to go look at a 10-year weekly chart. So let's go back. They have a 10-year low of $49.68, 10-year high of $187.73. Take me off the screen and we can see that this is 2016 right here. So this is a full 10-year chart. Now, looking at support and resistance. Oh, let's make this quick. So we'll go here, price level here. I'm seeing this. Bam. All right. So here held as resistance. Here was used as resistance and support. Here, resistance and support. Here, resistance and support. We can see that it's responding to that price level of $135.93 a few times. It even did it here. Okay. So that's a significant price level. Another one, I'm seeing this level right here. Okay. Now, this price level was also respected as support and resistance here, 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 and here. All right. So I'm getting that on the weekly chart. And because the price area is already up here, guys, I don't really think we need to look at any other price levels on the weekly chart. Let's go ahead and go back to the 1 year daily chart. Put me back on the screen. There we go. So there's one. Now, when we look at the weekly chart, we can see that this is an area of support. Looking at the daily chart, looking at the 1 year daily chart, we also see that it was a gap here between this candle's low and that candle's high. Edit properties, make it yellow. We're going to gap this over or draw this over to today's date, which would have been July 2nd. And we can see that today filled that gap. The price also got above the 200-day simple moving average, the dashed white line, and it's been trading above the 9-day simple moving average for a while. Okay, that's what we're looking at down there. As far as support and resistance, let's go right here. There's another line I'm seeing, guys, and it's going to be right here at the high of this candle. Bam. Come on now. Come on, what's going on? Wait a minute. Price level, snap to that candle. There we go. All right. So that's what I'm seeing on the daily. It's well above the 200-day. It's above the 9. So we have a few price levels here, including that 9-day simple moving average. That's going to be an area of support for me as well. So it would have to get past the $122.56, the 200-day simple moving average. So that price point is $120.38. The 9-day simple moving average is $115.16. And then we have these other price levels that support as well. $115.83 and $113.29. So we don't need anything else below. But above, this is what I want you to look at. We have a gap over here. So there's the high and low of those two candles. Edit properties. Make that yellow. Extend that over to December 1st. Bam, 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 bam. December 1st. That's November. December 1st, bam. So that gap has not been filled yet. The dates for those gaps, February 17th and February 13th. So that was like right before a weekend or something like that. Yeah. And it possibly was a holiday, because I'm seeing 14, 15, 16 is going from the 13th to 17th. That's 3 days. You got 14, 15, 16. So it was a holiday in there somewhere. Okay. And then we have the 52-week high of $151.57. Okay. So that's what I'm seeing as resistance. That's what I'm seeing as support. We did that pretty quick. So what I want to do, I'm going to zoom in so you can get a good look at it. That's good. Pull it over a little bit, and then I'm going to get the stock quote for what we have on the charts. Okay. And then we can get ready to wrap up the show. So data box, floating data box, mouse over today's candle. So Genuine Parts Company opened today at $119. This is all the way over there. $119.41. They had a high of $135.44. They had a low of $116.76, and they closed today at $132.57, which was a trading range of $18.68. The volume, they traded over 5 million shares today. Now, let's take the floating data box off. Take me off the screen, and let's talk about the volume. So the average trading volume for Genuine Parts Company is 1.4 million shares in a daily trading session. So 5 million is definitely above average. That's like three times what they normally do. So let's do this a different way. So we got 1,400,000. There's the million. But we need to divide the other number first. So 5 million. Let's just do 5 million divided by 1.4 million. That's 3.5 times what they normally do on average. We did that real quick. All right, now this candle, this red candle right here, that volume was slightly below average, coming in at 1.3 million on the previous day. So that was Wednesday's candle. So even without earnings were back here and over here. Guys, that was a very bullish indication today. That's a lot of volume. It's so much volume. Now, remember, everybody talking about the information technology sector. Everybody's still crazy about it. You see that they pulling their money out of it. Now we looking at these other companies in these different sectors, guys, and they're coming up without any news. Like, I ain't hear nothing in the news about this company. We can check over here to the left, but I'm going to do that in a second. But my point is, there's no earnings. We would see that right under the charts. It had a 52-week low of $90.78. Then when we looked at the 10-year low, it was $49.68. But we can see that it was consolidating for years. Like, this is a normal range for it to trade in for years. So this was from 2016. Let me do this again. From 2016, and you can't see it because I'm on the screen. From 2016 to 2020, it was basically trending sideways. It did drop out of the range for a minute right here, but then it recovered. Okay. So it fell back into that range when it was trading in this price over here earlier in the year. So it was trading at these 2020 to 2016 prices. No wonder it skyrocketed, but nobody was talking about it. You see, reading the charts. Now we go back over here, and I want to check to see what they said about it in the news. What was their explanation about this? And let me put me back on the screen as we blow this up, and then we can finish talking about the volume and wrap up the show. Just teaching you how to do this real quick. All right, put me back on the screen. All right. So what it's saying, I want to make sure it's not too long. This article was automatically generated by Dow Jones using technology from Automated Insights. Shares of Genuine Parts Company climbed 12.9% to the $132.57 on what proved to be an all-around mixed trading session for the stock market, with the S&P 500 index remaining mostly unchanged. Remember we talked about that? It basically didn't even change. And the Dow Jones Industrial Average rising 1.1%. Genuine Parts Company closed 12.5% short of its 52-week high of $151.57, which the company achieved on February 12th. The stock outperformed some of its peers as Active PLC fell 2.3%. My point is, you're reading all of that, it ain't doing nothing but telling you what happened. Like, they're just telling you chart speak. They're just telling you, hey, this stock went up this much today, despite an all-around mixed stock market, because the SPY or the S&P 500 barely changed. They're not explaining to you why the stock actually went up. They're just telling you that it went up and how much. There's no reason behind it, because when stuff like this happens, to me, this is more of a reason that I know that this is simply sector rotation. These are institutions moving their money from one sector into other companies and in other industries and other sectors, because the news never tell you why what is happening is happening. They don't have a negative story or a positive story. It's positive in the sense that the stock price went up, but they have no story that actually explains why it went up. Because if they told you that, then you'd be educated. Oh, institutions and banks are moving their money over into undervalued investments over in the other sectors and industries in the market, because information technology and the storage and semiconductor industries inside the information technology sector are overvalued. They won't tell you that, because if they told you that, then you'd be educated. All right. So that's that. We looked at the news. We talked about that. They ain't talking about nothing. They just explaining to you that it moved up today and don't have no explanation on why. This company also pays a dividend. I don't even remember if I did the stock quote. I think I did. And then we talked about the news, because I think I remember reading this really fast. Yeah. And then we talked about the volume. I remember talking about the volume. So here's where we didn't finish. So let's talk about this. Cut the floating data box off and let's finish looking at the volume rate percentile. We didn't talk about that. So guys, the volume rate percentile, we can skip over the days above. None of the days had higher volume than today, which means today's volume on this candle was higher than all of the most recent 252 trading days volume. Crazy. Now, how the news don't know nothing about that? And it's not a surprise, guys. Look how clean this uptrend is. This is a clean recovery. Now think about that. As this is trending up, what are they talking about everywhere? Quick quiz. What are they talking about everywhere while that's going on? That's what they talking about. Because this move been happening for about for about a month and a half now. This big candle is just what's catching everybody's attention, but it's been moving up. You see what I'm saying? So now what we need to look at is how much of that entire move, what's the percentage on that entire move? Not just the move today. They telling you about the move today and how far it is from the 52-week high. You notice how they never told you the percentage move from the bottom? This thing acting so goofy. So let me clean this out and show you what I'm talking about. Let's clear this out. What I'm saying is they never told you how much the gain was from the 52-week low of $90.78 up to today's close. So we're going to do that ourselves. That 52-week low to today's close, guys, is a 46.03% gain over a matter of 44 days, a month and a half. This stock is already up 46.3%. 46.03%. And the news wasn't talking about it. As far as I know, I ain't heard nothing about it. They've been talking about SpaceX and, information technology and all this other stuff. So here's the consolidation range coming off this 52-week low. Is it going to break to the upside or the downside? If I had to put money on it, the camera then went out. We've been talking good. The camera then overheated again. Let's cut that off and switch over. So coming off this 52-week high after this consolidation, if I was a betting man, I would have said that it's going to break to the upside. And that's what it did. And I would have thought that because of how long it was already coming down over here. It recovered here. It was doing a consolidation over here shortly. Broke to the downside, came back to the same level as that consolidation. Like if I do that, you'll see that's around the same level at the bottom of that consolidation. So that kind of held as resistance, pulled down further, created a new 52-week high because this would have been, low, because this would have been the 52-week low over here. So it created a new 52-week low, consolidated again, and then started its recovery. Now, the longer that it takes for this to happen, the 200-day simple moving average starts to curve down. You see that? It starts to curve down. Now, as it curves down and the trend starts to come up, they meet and then it takes off. Got it? Got it. Got it. Got it. Got it. Now, what's so crazy about this? Now that this camera overheated, when we do the close for tonight, we're going to have to use this other camera. We already did the volume rates. We can actually end the show right now. We already over 2 hours. So let's go ahead and go here. Guys, thank you for rocking with me tonight. If you're watching this back on the replay, we did a lot of stuff today. We covered a lot of different things today. Take advantage of the chapters. I don't blame you if you don't watch the whole show, but I'm going to be a little candid and vulnerable with you right now. This was a very important show for me tonight. And the reason why is because I really didn't feel like doing the show, and I don't feel like I did my best, but I showed up and I did it anyway. And not only did I do it, it was long, it probably was difficult, but I gave a lot more than what I normally do in the live streams. I did a lot more than what I normally do. That's part of the reason why the show was so long tonight. But thank you guys for tuning in. Thank you for subscribing. Thank you for liking the content. Thank you for being supportive and all that other great stuff. I really appreciate you. But I'm so glad that the market is closed tomorrow and I get to start my weekend as soon as I finish this live stream tonight, even though I got a few things I need to do before I call it a night. My weekend starts. And I'm going to make sure that I got a great show for you guys on Wednesday when we do the weekly recap live. Okay, so let's get this wrapped up. Let's take this ticker off because we're done with that. So let's go here. Let's go there. Let's take that off. And let's do that. Let's use this thing right here. We ain't use that tonight. I'm thirsty too. I'm gonna make me some tea. Give me some ice water. It's cooler. At least it's starting to cool off tonight. So here we go. You already know. I hope that you learned something and I hope that you earned something. Thank you guys for joining me tonight. Just a reminder that the stock market is going to be closed tomorrow. I don't know how many times I said that tonight, but they're going to be closed tomorrow in observance of the 4th of July holiday, even though tomorrow is the 3rd. All right. And this Sunday, June 5th at 9 p.m. Eastern time, we're reviewing this week's performance of the 11 sectors in the S&P 500 index, companies that stood out, notable market news, and performing a live Q&A so we can focus on building our community. And make sure you guys keep tuning in weekdays following a trading session at 11 p.m. Eastern time. Take care and God bless.